Hi, this is Daniel, and you're watching Unrivaled Investing, a no-hype, mission-focused channel trying to find you exceptional companies and unrivaled investments. I'm looking for potential multi-baggers, types of stocks that could potentially go up hundreds or even thousands of percent over time. If you're interested in following my personal journey, go to unrivaledinvesting.com, or I call it what are the potential multi-baggers that I'm buying. Normally, I'm focused on, as I already mentioned, stocks. I'm looking at individual companies, analyzing them, breaking them down, telling you what's their value proposition, are they potentially unrivaled, as well as what's their valuation, what do I think about the risk reward. That said, a lot of folks do like it when I break down the macro takes in terms of what's going on in the near term. And in the near term, a lot of folks have seen the stock market start to decline. And so this video, I wanted to do a quick follow-up to a macro call out that I did earlier this week, because a lot of people thought it was helpful, and there have been some additional data points that are worth considering, especially as the stock market has started to decline. And it makes folks wonder, is this just investment jitters, or is there actually new data that's coming in that could warrant changing of the narrative, that can warrant changing thesis on where the market goes in the future? So let's talk about what's actually driving the market right now. Is it just emotional jitters, or are there new data points that could be driving it? And so to understand, to have a little greater context, this isn't my first video on sort of the macro themes, what's going on. I did a video earlier this week sort of warning that small cap stocks were failing to catch up with the broader market, talking about Stanley Druckenmiller and suggesting that, you know what, based on a couple of these different sectors within the S&P 500, it is potentially showing that there's worsening risk preferences. So effectively a risk-off summer potentially coming. And I'd argue since then the price action has actually gotten worse. As you see, not only did the Russell continue falling, but also now the S&P 500 started getting involved as well. So this leads to what are the additional new data points. First, a quick plug, if you will, 10-second plug, where once again, this is Unrivaled Investing that you're watching. If you want to follow my personal journey, go to unrivaledinvesting.com. First week of the month, I call out my portfolio. During the month, I call out a potential multi-bagger, and each week I have updates of what am I buying and selling, what am I thinking about. So that's the weekly updates. That's unrivaledinvesting.com. So now let's go into what are the additional data points. And one of the podcasts I like to listen to is the All In podcast, not necessarily for great investment insights in terms of, hey, what's going on. These are a bunch of very successful investors, entrepreneurs, a couple of billionaires. They're all worth millions and millions of dollars, and they've founded many successful companies. And so I'm not looking for like great wisdom or anything like that. But what I do use it for is it's always worthwhile to understand your data sources and what are the data points you're actually using them for. Why are you using them? And so I consider looking at the All In podcast as a good pulse for how wealthy investors are actually thinking, how their risk tolerances might be shifting, how they're even considering the market. And they offer a very candid perspective at times of what they're doing and how they're thinking. And I think it's a great, if you're playing poker and someone's telling you emotionally how they're feeling, that's really helpful to understand why they're behaving in a certain way. So it helps me understand the broader market. And a lot of folks do enjoy having sort of a macro take. Now, as regular viewers know, I'm not playing the macro. That's not what I'm trying to do. I try to find unrivaled companies, and that's, I'm looking for potential multi-baggers, and that's the vast majority of my focus. That said, occasionally I do like to understand what's going on in the bigger picture, and that's what this video is about. And so looking at them in their most recent, All In podcasts, David Sachs, who's one of the co-founders of PayPal, he talked about how he actually got COVID recently, despite the fact that he was double vaxxed, so he'd received both of his vaccinations through Pfizer. Fortunately, it was only a relatively minor cold for him, or, effectively the symptoms felt like a minor cold. But we're seeing increasing data of folks that are not vaccinated getting hospitalized. And he also had sort of this awareness from the podcast, sort of saying, wait a second, I have 70-year-old parents. That's what he was saying. I have 70-year-old parents, and they were wondering, should we be going out? Because he got this, and he attributes it to eating outside and with another person that was vaccinated. And so he's saying this changes the risk preferences a little bit, because then he exposes his family. And then what about you have older parents, and they might be double vaccinated. And effectively the effectiveness of vaccines is what he was saying is effectively they're declining from catching it, but it still lowers effectively how you it still dramatically improves how you feel. And that's so vaccines are working. Fantastic. Science prevails. But the effectiveness of catching it has gone, what they were saying, from like high 90s to like 60 to 70%. And that delta, that change could impact risk tolerances and behaviors. For example, if you are retired and figuring out, hey, do I want to go on a trip to Maui or do I want to go to a restaurant? This might change your decision because you might be saying, you know what, there's increasing probability that there's a variant out there that, might just make me not feel well. Vaccines work and that's great, but this is the concern. And so is it still worthwhile to go out and, let's say, spend like I used to do pre-COVID? And so you're starting to see sort of that question like, hey, could this affect the marginal buyer? And then if this affects the marginal buyer, maybe it's just a few percentage of the economy that says, hey, you know what, I'm not going to open up the purse strings, I'm going to stay at home more often. Does that affect the economy? Does that lead to ultimately worse business fundamentals? And that, of course, leads to worse stock prices. And so that, I think, is something that either the economy or investors are considering right now. So it is a real data point. The other key data point that came out since I did that video talking about effectively how the Russell 2000 and small stocks haven't been able to keep up was you did have this high inflation print, but Jeff Gundlach, who I think is arguably one of the smartest minds out there in terms of investing, he's called the bond king for a reason, manages tens of billions of dollars focusing on fixed assets. He came out on CNBC and had this really interesting take saying, I think a 5 handle on the CPI, so he's talking about 5% inflation, is sort of shocking. And I think a 9 handle on the PPI, so this is talking about producer price index, so the prices businesses have to pay, is truly shocking. If we get even 2 more months of this type of data, it's going to necessitate a reality check by the Fed. The reason why this is so important is, as regular viewers know, I strongly believe that this market is being held up, perpetually boosted higher by the Federal Reserve, effectively doing quantitative easing to the tune of 100 billion plus a month. And so what he's saying is, wait a second, they've been able to continue doing that, this massive radical QE, because they're saying, inflation's transitory. What Gundlach is saying is that, look, if you have that type of inflation for 2 more months, it's going to be a harder stance for them to hold. And so if that happens, would they have to reverse QE faster than what the market is currently anticipating versus what Jerome Powell has currently articulated, saying, no, we've got this under control. It's going to be well articulated, really, it's going to be a long time from now before you have to worry about even tightening or something like that. So I think he's saying effectively, like, look, there's increasing odds that they're not going to be able to hold the line looking at this data. So I think you have 2 data points that are making folks effectively uneasy. And I think you would summarize it as, one, variance with COVID and how that could change the marginal buyer's behavior even if they're vaccinated. And 2, the impact effectively of higher inflation and the ability of the Federal Reserve to continue to hold its course of keeping up with 100 billion plus of quantitative easing. So that really is the 2, I'd argue, key points to consider. So then, what are the summary conclusions? Because folks are wondering, is this just jitters or are there actual data points? I think this is not just jitters. There are additional data points, but you need to understand we're in a very frothy market, so a lot of things can happen. It's when you're looking at a very frothy, very fragile market, it doesn't take a lot to have dramatic movements, dramatic outcomes, dramatic changes in price. The second key aspect is that there's increasing concern the Fed has to stop, but they're still playing the game, folks. And if you look at the history of the Federal Reserve, you can't really point to a large market crash where the Federal Reserve didn't tighten beforehand. And so you're looking at like 100 years of data. Now, of course, just because it hasn't happened doesn't mean it can't happen in the future, but 100 years of data is a lot of data for you to consider. And so the reality is they are at this point still playing the game. The question is, could price action start preceding the Federal Reserve sort of saying, hey, we have to capitulate. We can't keep up with this quantitative easing. Could, effectively a first for, 100 years of data. The other concern to consider is that there's an increasing concern the economy might turn because of the COVID variants and vaccine effectiveness. Now, you effectively saying, yeah, you'll still be healthy if you're vaccinated. It'll just, but there's a chance that you could still get it, lowering the odds that you're completely immune from it. So you might just have what David Sachs experienced, which was the effectiveness of a common cold. Now, of course, it is definitely worthwhile to get vaccinated. Science is a wonderful thing. Big thumbs up. So then the final piece is, well, wait a second. So what am I personally doing? And you'll find this is a pretty common theme. I'm not changing my strategy dramatically based on, whatever the market's doing. So there's a couple of key things. One is I'm always focused on these unrivaled companies. That's my focus. If you want to find out what are the particular companies I'm buying, go to unrivaledinvesting.com. Occasionally I call out, like, hey, I just bought Alibaba, and here's the reason why. And so I've done a video on that if you're interested, because here it is. I think it's not only a very strong company, but also an attractive valuation. So the other component is not only focus on what are potentially unrivaled companies, but also consider valuation. I think if you have a risk-off environment, I think valuation will come in more and more into focus. And a lot of these hyper-priced stocks or even meme stocks, people are starting to realize, wait a second, there might be a huge disconnect between fundamentals and valuation. So I would say valuation might become more important in this environment. And we've been in a period lately where a lot of folks are saying, hey, valuation doesn't matter. Valuation doesn't matter until it does. And then a lot of folks wake up. And then my third, and this is more, idiosyncratic, what I'm personally doing is I do have a hedging approach where based on price action, I do hedge. And so that's, I talk more about that on unrivaledinvesting.com. If this video has been helpful for you thinking about what's driving the recent weakness in the market, is it just jitters or is it actual data? If this video has been helpful for you, please make a point of subscribing. If you're already a subscriber, I do appreciate that thumbs up. Thanks so much for watching.